Hi everybody, welcome to another update on the gold forecast index, the holy grail to predicting gold prices. In my last video, I talked about stagflation, and that means that you should be buying gold because gold is the best protection against stagflation. So let's see how gold has been doing last month. So gold has been going up, okay? 2,300 to 2,350. Not a lot, but it's up. I think it will go higher. So let's look at our gold forecast index. This is based on leading indicators. It was positive last month, but this month it has gone back negative. So not everything is great for gold. It's not that bad, but yeah, we need to see this go back up. So not looking that great. It's stable. I think it's stable. Gold will move up in time. This is still the same. Misery index, I still think that this will trend upwards with higher unemployment rate and rising inflation. So this should be good for gold. Real output is bottoming out, so it's not improving that much. So as this bottoms out and goes back up, then you will see gold moving higher. So you want to see this chart above zero to be bullish gold, because that means there will be more inflation. But it has been moving down, so that's good for stocks. Now it's starting to base out and move back up. Let's look at some of the production of these countries. Okay, so production of copper in Chile is down a lot. So this is good for silver because less byproduct is being produced. So yeah, there are some things that are bullish silver. Copper production in Peru also not that great, but it's still rising in the long term trend. ETFs. ETFs have started to buy, not a lot, but it's looks like it's bottoming out somehow. Could be that institutions will start buying gold, so that's very bullish. Everyone thinks that this is a top. I think this is a bottom. So bottoming out and moving higher as institutions start buying gold. So this could be a bottom. Watch for that chart. COMEX gold, this could also be a bottoming out process. Higher registered gold. This is a pretty big rise. Maybe it doesn't drop until zero. So this could be a plateau. We will see about that. A lot of COMEX deliveries, higher than usual. So that means gold will probably go up because this is correlated to the gold price. LBMA starting to bottom out. So this could be a bottom. Same here with silver. Who knows? Maybe the selling is over and we will see higher gold prices. From China, the demand has gone down. So this is not that great. I had hoped that this would be at least stable, but Chinese don't want to buy gold at this price anymore. It's too high. But anyway, they need to buy it because they need the gold. And there's nothing else to buy. Real estate is crashing in China. There's still no silver demand. It's still dropping. So it's weird that this silver is going up. That's due to China buying, I guess. Silver inventory is low, so if this turns back up, then we will see a spike in silver. I think silver will follow gold higher. COMEX silver is bottoming out, so here we already see the buying. That's good. That's JP Morgan. Okay, China Central Bank. This is old data. China is not buying that much gold anymore. It's somewhere here. That's because gold is so high. But they are still accumulating gold. So this percentage is rising. US mint sales were not that great at the lows here as well for silver, below average. So there is no gold or silver rush yet. And you can see that from the premiums are dropping. So it's not high premium, which means there's not a lot of demand from retail. Junk silver also at lows, so not a lot of people want to buy at this price. Only the gold and silver bucks on Twitter. However, Chinese premiums are still at 1.5%. So China is still buying, there is still demand, and I think China will win and will push gold to 2,500 based on these premiums. Same with silver. Silver is having the highest premium in China today. So if China wins this battle, then silver will go to 35. It's all China. It's not coming from the West. Here the premiums are also down on gold. PSLV premiums probably also down. Let's see. Meanwhile, COT report is interesting. We see that there are still a lot of shorts, both in silver and gold. So there could be a slam from the COT report, but the good news is this point here. This point says that open interest is back down. So typically when open interest is back down, that means that gold could have a leg higher as open interest comes back, as you can see here. Okay, so if this goes back up, gold could shoot higher. So yeah, it's not black and white. You need to take everything into account. Swiss franc is moving up. That's very good for gold. Let's look at the PSLV premiums. Still negative. That's not that great. Retail is not interested in silver. This is the tips. Rate is bottoming out. That could be a good sign. If this moves back up, then gold will go higher. Real yields, yeah, also basing out. This needs to go up to push gold higher. Now we are seasonally in a very weak period in June, so there could be some downside. Wait until July the 5th to have the bottom. So if you want to wait, it's a good month to wait a bit until it's July, and then you can go all in. So June, not that bad, not that good for gold, also not that good for silver in June. So you can wait for the next month to buy the dip. Bullish percent index is very bullish, too bullish. You can see that here. So typically when it's too bullish, that means that we have a top. Yeah, you can wait until this goes back to bottom, but I would just keep on buying every month. Then here we we still see the big picture that gold is very undervalued compared to stocks when we compare it to the currency in circulation. So gold will go up normally and stocks will go down to get to this point. The 30-year to 10-year yield ratio is still flat and yeah, bottoming out basically. If this moves back up, then you have an inversion of the yield curve, which means gold will probably go higher. So wait for this to base out. Let's see how the trends are in buying of gold and stagflation. So how to buy gold? Are people still interested? Less interest, but the trend is still up. On stagflation, yeah, the stagflation hype has subsided a bit. So maybe the economy is improving and inflation is down. So this hype is gone. However, debt to GDP is still rising. The blue line is going up, and that will be good for gold. As you can see here, it's correlated. So just buy gold, it will go up because the debt to GDP will continue rising. There will be more defense spending. War is heating up, so defense spending will increase, and deficits will increase. So that's good for gold. Near-term forward spread. This is the coiled spring. So if we have an inverted yield curve, that means that gold will go up if it uninverts, and when they cut rates. And we have seen some central banks cutting rates like the ECB today and the Bank of Canada. And next up is the Bank of England. They will probably also cut rates. And you can see this. This is the near-term forward spread, and many of them are going to cut rates. And as they cut the rates, gold will go up. So these are points where you should be buying gold if this is in a negative. So as this moves up, then gold will go up. As you can see here, each of these points are bullish gold. Then rate cuts. Rate cuts are coming. And each time when you have a rate cut, stocks underperform. So these are the stocks, and this is the gold price. Gold goes up when you start to cut rates. And we are now in a rate cut cycle. We are starting the rate cuts and gold will move higher. So expect 2,500 gold. Next year is 3,000. Latest rate cutting indicator is the 2-year yield. It's down a bit. Yeah, down a bit. So expect rate cuts to come, as you can see here. So rate cuts should follow these lines here, going back to 4% eventually next year. Foreign gold deposits still the same. Bank term funding down. So they need to repay the money, and probably some of them will go insolvent. Let's see how that goes. Do they have enough cash? It's down, the cash is down. So some of these banks will probably start failing. That's good for gold. I want to go over the copper checklist as well. Is copper still a good buy? That's a very difficult question. Copper is really difficult to analyze. In the long run, it goes up, okay? But in the short term, it's not that easy. So global economic activity is dropping again, so that's not good for copper. I still think a recession is coming. You can see a lot of inventory, so that's not good for copper. I think if this keeps on rising like this, copper could go back to even $4. As you can see here, this is going the wrong direction, so copper could go down as inventories rise. There's a lot of social inventories, and actually the power consumption is stable, so it's not like China is cratering, but the real estate is not that great at the moment. And don't forget, the credit impulse is down. We will have a new update next week on this, but I think copper could be weak due to this drop. Shanghai Composite was down as well. GDP forecast is dropping. So not a lot of positive indicators for copper, unless the deficit. This is the only indicator that's positive for copper. There's not a lot of copper concentrate available. So TC rates are still at 0. China is not importing copper anymore. As you can see here, they are exporting copper. That's not bullish copper. Let's see inflation. Inflation should go up as the PPI is now back positive. But lately inflation has gone down a bit. This is important. Most important chart. Brave Butter Skelly leading index is almost negative. So give it half a year, and this leading indicator will move over to the coincident indicator, so the blue line. So in probably half a year, this blue line will start dropping because red leads blue, right? And it takes about a year for that to move to the coincident present. So this went down, and then here it went down, this went up, and now it's moving up. But the red line starts to move negative again, and by the end of the year, you will see a recession coming. So that's what I'm positioning for gold to rise during the recession. I'm also positioned for this. These are the bonded copper premiums are negative. So if this moves back up, copper will move down. So I do not want to be invested in copper right now. Yeah. Okay. Next up, let's take a look at central bank balance sheets. To get a feeling of the QE or QT that is happening. They are still doing QT. Every central bank is still decreasing the assets. So yeah, that's not bullish for stocks or gold. Janet Yellen still has some cash in the treasury. So the purple line, treasury general account, still has cash. So this can still draw down and push money into the system. Reverse repurchase agreement have bottomed out, but will probably keep on drawing down. So yeah, there's still some liquidity left in the system. Money supply. Money supply is flat, not going up or down. Yeah, we need this to go up to push gold up. Probably when they start doing QE again, then this will move back up. Deficits. So we got the trade deficit number today. Let's see. Looks like deficits are rising, so it's going down here. Wow. So on the services side, it's still fine with all of those tech companies. But on the goods side, look at that. It's cratering. So manufacturing is not doing well in the USA. So only services are still okay. That's important. Manufacturing is not doing good. Trade balance is following this leading chart. I think this will keep on dropping. More deficits to come. Imports and export price index. Import prices up and export prices down. That's going to increase deficits. Commodity import exports prices up, so inflation is coming. And here's amount of imported exports up, but yeah, imports are up more than exports, so more deficits. And here you can see that the deficits are rising. So this chart moves down. I expect fully that the US dollar will weaken because this will follow the deficits down. So expect US dollar to drop, and that's very good for commodities and also stocks, but not that good for bonds if you are invested in US dollars. So yeah, commodities is looking great, gold even better. Let's take a look at capacity utilization. Capacity utilization is, yeah, the trend is down. So inflation trending down as well. Probably the factories have too much capacity. That's not good for the economy. Yep. So that's that. Um, let's look at some of the blog posts. This is an important one. Gold ETFs are actually net positive now. So they are starting to buy gold. Here you can see it was always net negative. And now this bar is positive. So that means maybe retail has started to be bullish in gold, and that will push gold higher. And China is still buying as well. Probably they are looking at this chart and they see that the unemployment rate is starting to rise to the, let's say, 4.5% level. This is very bullish gold because that will push up the misery index. During a recession, I would not be in oil. I think oil will be stable, but you can see here that it's probably moving to the downside when the recession hits. By the way, there's also this leading indicator tab that you can use. And this gives you an idea about the economy. And you know, it's trending downwards, also downwards, all downwards. Corporate profits actually up, but here the sum roll is almost touching the recession line. This is going to tell you that the recession is coming. So let's look at this chart, monitor it. If it gets to the orange line, you will see a recession. Container shipping rates are rising. That's good for container ships. You can buy Danos Corporation for this. Copper miners living in a dream world. Yeah, I would not be buying copper miners right now. They all think that copper goes to $6, $5, and we are currently at 4.6. So they are all overvalued. So I will not buy overvalued copper miners at this time. Yield curve inversions. Yeah, this was a very nice chart. So the longer that you are inverted in the yield curve, meaning that the short-term rate is higher than the long-term rates. So the longer that you stay in inverted, then you have a bigger stock market drawdown. Okay, so how long are we inverted right now? A lot. So this is the period that we are inverted. That's the blue line. Normally it only inverts a little bit and then goes back in the plus. Now we are very much inverted for a long time. So I expect something to break by the end of the year. I'm not seeing it yet, but it will come. Metals outlook. So the IEA had an update on metals. Which one is the best? This one is copper. Copper looking good. So this is the demand, and the bars are the supply. So you can see that there's more demand than supply. So copper is very good to buy in the long term. Nickel is not that great this year because demand is balanced with the supply. But in the coming years, nickel will be better. So I would still be in copper instead of nickel. So nickel, not my favorite. Lithium, also not my favorite, is also balanced, even in surplus this year. In the future, it will be better, but this year, still not that great. Cobalt, also surplus, even a surplus in 2030. So cobalt, avoid it. This is not going well. Graphite, even worse, always in a surplus until 2040. So graphite, just forget it. So this is the update on the metals, battery metals. Leading indicators falling. Yeah, that's what the leading indicator is falling. So I expect something to happen by the end of the year. Yeah, this is just a chart that I created on silver inventories. So they are falling. When this reverses back up, then silver will rise. Sprott update. He bought some gold miners, some silver miners, fertilizers, CF Industries, and even Sigma Lithium, because this has, he thinks that it has bottomed out, but I don't think so. I think Sigma Lithium is still overvalued. He sold steel, SSR, because yeah, that mine blew up. B2 Gold, yeah, in Mali, I-80 gold, that's a disaster. They keep on diluting. So you can look at this and see what's interesting for you. Gold is at the start of a bull market, very nice charts. You can see here, every time it breaks, then it soars, breaking, and then soars, break, soar. And now we are also having this breakout. So I expect this to go to 3,000 very easily. Gold as a percentage of financial assets, still low, so easy upsides. Yeah, monetary gold compared to broad money supply, also very low, will move higher. And as a percentage of international reserves, also low, moving higher. So gold is a very good investment. Central banks are now cutting their rates. So this is bullish gold, period. Because lower rates means less interest, so you can better hold on to gold. And that was it. So in conclusion, I think gold will be flat for this month due to seasonality, but in the long term, it will just move higher. It will go to 2,500 and next year 3,000. There are a lot of bullish things that I talked about in this video, especially recession that is coming by the end of the year. I see the signs, and that should be good for gold. So I'll see you in the next video. Bye.